Good morning, I'm Joe Brusuela, Senior Economist at Bloomberg LP with your Bloomberg Economic Brief Morning Cup of Joe. We've got a nice quiet morning in global financial markets today. All eyes are on the G20 meeting in Washington, where finance ministers informed European leaders that they're going to have to fix their sovereign debt problem themselves. At the same time, the IMF is rounding up roughly $320 billion in cash to build a crisis fighting fund should things spin out of control. Now, we've had a very interesting week here in the U.S. economy. We had 9 major economic releases. Unfortunately, 7 of those arrived below expectations. 1 was on target, and 1 arrived above the Bloomberg consensus forecast. Now, over the past month, we're beginning to see a disturbing pattern that looks like it's going to repeat itself. That is what we saw in 2010 and 2011, where we did see a pickup in economic activity in the final quarter of one year that spilled over into the first quarter of the next, followed by a springtime swoon in the U.S. economy. Now, one way to examine this pattern is to take a look at the Citi U.S. Surprise Index, CESI-USD space SSBH Index Go on your Bloomberg terminal. Now, set the start date to January 1st, 2010, and the end date to April 19th, 2012. And you can see this disturbing pattern that I'm describing. You see that pickup in economic activity followed by a springtime swoon. Now, this accurately does describe what went on in 2010 and 2011. And if you look at the Citi U.S. Surprise Index, that same pattern is already well underway early in spring 2012. Now, the question that always follows is, does that mean we're going to fall into recession? No, of course it doesn't. The economy doesn't run on a simple 0-1 binary axis. Remember, in 2011, we came perilously close to falling into a recession, but that was primarily due to a massive escalation in the price of oil, this intensification of the EU sovereign debt crisis, and of course the widespread dislocation in the global economic supply chain that followed the Great Tokyo Eastern earthquake. This year we're dealing with an escalation in oil and gasoline prices, which by the way looks as if they've topped, and a more muted sovereign debt crisis in Europe. Now, that doesn't mean we're not going to slow down, and I do think that we will see below trend growth here in the United States in the second and third quarters, with the risk of a more pronounced slowdown in the final quarter due to the impending fiscal cliff that will start January 1st, 2013 if there's a policy error out of Washington. Something to think about as we go into the weekend. I'm Joe Brusuelas. It's been your Bloomberg Economic Brief Morning Cup of Joe.